Hey, what up, everybody? Duck here. Welcome to the stream. Let me get a quick sound check before we get going here. Make sure music's not too loud. I don't know if you could even hear it or not. I tried to turn it down before I turned the mic on. When DXY die, yeah, soon, hopefully, very, very soon. Or not, right? And then everything goes to shit, but no, hopefully DXY rolls over soon. That's part of this plan. If not, we must reevaluate. All right, so how we doing on all good? Sounds perfect. Okay, cool. Good news, good news. Happy Easter, everybody. Easter stream. Figured this was kind of a interesting time, right? You have a lot of those other type of I don't even know if you want to call them fundamental, almost like just a bunch of things aligning, right? Where you do have a holiday week, right? Where you had a 3-day weekend. So a lot of, big firms and whatnot were closed on Friday, right? So you had this 3-day weekend to have a lot of effery, continued effery, right? Which has been on the down since basically the entire month of April so far, kind of just been on the down. But yeah, so you had that, and then you got all those people that always talk about the moon cycles with their full moon stuff happening like right now or something, right? So I don't know, it just all that stuff it's gonna look like those were catalysts is what I'm trying to get at, right? They're gonna be able to argue and say, oh, look, it was a full moon pump, or it was a holiday pump, or Easter pump, right? The rising, whatever you want to call it. A bunch of mumbo jumbo, but it is gonna kind of align because that stuff kind of just happens. It's weird, right? So what we're looking at right here on Bitcoin is the daily, okay? And we obviously have these two massive double bottoms, right? So this second one being a higher low, right? Nice, obvious higher low than, what we put in June 22nd. We have a higher one January 24th. So easy, number one, easy invalidation here. Let's just start with that, right? And it's actually going to tighten up, but for now, obviously, a spot trader right here would not want to see below 32. If you see below 32, it's going to get real bad. I mean, unless even if you can't even get a little wick and come back, it's too bad, right? It's too devastating. And odds are, if you were to do that, it wouldn't be just a little wick and back. You would end up doing like, you'd stay and you'd probably leave, right? So it's too devastating. You can't have that, right? That kind of stuff puts you back here, okay? And that's that nasty area that's never been retested, right? That previous 2017 all-time high. So no, we don't want none of that, no part of that right now. In time, yeah, maybe we'll be rooting for it, but at the exact moment, we are not, okay? Until things change, we are not rooting for that, all right? So what we want to see have happen here, obviously these lows have to hold. So zooming in, let's kind of zoom in here to where we are currently, okay? That was just more of a big picture, just so you could kind of see what was going on as we zoom. All right, so now as we bring things into perspective here, okay, we have this stop loss that we kind of identified below this very, very discernible swing low at 33. We don't want to see that, right? So we have that kind of hanging out there for now. But down here on your oscillators, it's getting really interesting. So let's start here on this RSI. So I know a couple of you identified this in the Discord as well, which is good eyes, right? Starting to get some good eyes out there. It's really, really good to see. Love to see it, right? So we had this RSI breakdown, right? And yeah, that hurt. it continued this dump that's basically happened all of April that we were already just discussing a moment ago, right? But, now we've gotten quite a ways away from it. So, a lot of that has played out. It's not as concerning as it was right when it broke, right? So now what you have is this previous area, right, where we had the negative momentum islands here around March 13th. That was, where we touched this upsloping trend line of relative strength that we were riding at the moment, right, which did give you a little pump, right? So, that was that previous low. That's all I'm trying to define here, okay? So, zooming in on that a little bit even further, you see that on that, let me get this out. At that time, you kind of put in this double bottom, slightly higher low double bottom, right? And then you pumped off that. But now you've pretty much retraced that entire move, right? You pretty much gave that all back, which is, it's whatever. So now what we're looking at is we're gonna use this same area, okay, the same island area, and we're gonna identify that to where we are now. By doing so, we can now identify not potential, but really strong, actually, hidden bullish divergence on the daily there, okay? Now, you not only have it on this is the MACD, but you also have it here on the RSI, okay? So from that previous low to where we are now, can you see that, okay? So I'll clean this up. We don't need that anymore. And we're talking about how we were identifying these points, okay? That's why we're kind of anchoring from these areas, was because that was the previous island of negative momentum. We line that up with this RSI. And now what you're basically seeing here, for any of you that aren't as familiar with this as others, is basically the bears started to push price down, okay? They're pushing price down, and they turned down here on the momentum, right? They turned the MACD, they turned the positive momentum negative, and you're going negative and you're going negative, and they're pushing it down with all their might, right? Look at all this negative momentum compared to the previous, selling. This is much, much, much stronger selling, right? So when you have this selling that's like that, that's the bears really trying everything they can to push below this 33, right? They're aiming for what I said was, if they can get that, right? If they can get it below here, they're going to basically kill it down to 20, down to 19K. So of course, if you're a bear, or some kind of bearish firm or bearish entity or just bearish minded rich person, you're trying to do that. All right, so be it, whatever. Good try, good effort, cool story, bro. But you failed, right? So far you've failed. Until you prove otherwise, you have failed. Yes, you pushed it down a little bit, whatever. All we consider that, if we're bulls here, is just a simple reset of the oscillators, a little cooling off. It's healthy price action on a run to the upside. So not that concerning yet if you're bulls. And for bears, hey, you gave it all you had. Good job. So as long as price stays above this level here, right? So as long as they can't break what is basically 38, I mean, let's call it 37.5, right? So I'll even mark it if you want. We can't let the bears push price below that 37.5, right? Because what would happen to our hidden bullish divergence is it would go like this, go down, go down, go down. It would end up being even, and if they push it below, they're going to invalidate it right there. So that being said, you could almost call your stop like up here now. You see what I'm saying? You can use this area as a potential stop, or this last wick, however much room you feel comfortable with. But you see why we're justifying that, right? Because that's the point of invalidation for what we have going on here. It's going to push us down again, and it's going to turn into bearish convergence, and the bears are going to They're going to have control. So we can't let that happen. So that's why we say, okay, let's call this 36.5. We don't really want to see 36.5. Okay. So that being said, we've now justified a much tighter stop. So this is an okay time for you to take a position here, because your risk, right, is very minimized, right? Your downside risk. Say you enter, say you're entering where we're targeting is 38.7. So let's just say you enter in this box, okay? Well, if that's your entry, look at your risk. Your risk is 4%, okay? And if that breaks, well, let's go back to the drawing board and, kind of talk about this, right? And I see somebody saying, just don't want to get swept. And I know nobody wants to get swept, but if they sweep all this, and this is probably what you're talking about, right? If these lows get swept, right? So price action would, he's basically saying we would come, gosh, there's too many buttons. All right. He's basically saying price would have to come below these two levels. We'd hit 33 mark, right? And to me, I think that's devastating. I don't think we'd recover from that. I think, again, that's what would happen to us. So we would invalidate right there. That's why, okay? And right away, we're done right there. And at that point, if we see this back test hold, maybe we enter a short here, okay? And our target at that point would be 19K. But we don't want to see any of that, okay? We don't want no part of that. But I think that's why obviously a sweep is concerning, right? For one, sweep is concerning. Two, because it would stop us out right here. But again, we'd be able to reevaluate down here. We'd lose 4%. It's not the end of the world, okay? Because I mean, that's just part of the game right there. You got to be able to take a position like this because your upside is extremely massive. And also, due to your upside being extremely massive, okay, and we're talking like 67, okay? So 4 on 67, are you kidding me? So 4 on 67 basically would look like this, okay? Let's just call it, we'll target 64K just for easy round numbers right now, okay? So a 3-to-1 puts you way down here, okay? Allowing your stop to be below 30K. Our target is so high. If you're in a spot position, you're allowing yourself this permission to have a stop this wide. But if your stop is where we're saying it is, okay, way up here at the line, that means this position is 14, almost 15-to-1 odds on your money. I mean, a lot of people would say trading is gambling, and you mean to tell me a gambling man wouldn't take 15-to-1 on his money, right? You gotta be out of your mind. That's not even gambling anymore. It's borderline theft, all right? So those are the kind of positions you want to get into, okay? So that's what we're seeking here on this entry, is as close as possible, right? We don't need to catch the exact bottom because look, you got plenty to ride, guys. You got plenty to ride here. In either way, 60%, okay? So like you don't need to get greedy, 50x, all that crazy stuff. Even just think of 2x, that's 120%. 3x, 180%, right? So like just chill, bro. Don't get stopped out or licked, I guess I should say, between an entry and a stop that tight. There's no reason you should be sweating that little bit of price action here, okay? All right, so that's kind of the downside of things. Minimal downside, right? So again, hidden bullish divergence on the daily on both the MACD and the RSI, all right? That's what we're looking at here. And then if you zoom in on this and you start fibbing from where we're marking from to where we are basically looking at that 886. See that? 38,700 is kind of been our number we've been discussing for the past, I don't know, a while, right? And we've been talking 38.7, okay? That's That's our sweet spot right there. All right. So we can mark that as a potential kind of target within the target, right? And basically we have this box here because we're layering to a zone, and the zone could get even a hair wider if you wanted to capture the bottom of this square up right here is actually 37.7. So you can go between 38.7 and 37.7 and really not have any sort of issues, okay? Your stop down here is 36.5. So if you were to stop at 37.7, you know, you'd still have almost, you know, about $1,200 in wiggle room there. And you might say, "Oh, well, aren't you going to invalidate?" No, you're not. You don't have to stay. This is irrelevant, okay? Our anchor down here is what matters. As long as we watch, that's when we are even. We could go as low as even and actually still paint it. Reason being is because at that point this would be like this, right? You'd have so much negative momentum and you have minimal negative momentum here. So that would still be hidden bull, okay? It would still paint as low as 37.5550. All right, so you're still valid that low. All right, so no sweat. All right, so what we're thinking is, okay, so say we hit the low side, and that would be this square up right here. You see this down here from March 14th? We would hit the exact point that candle started. It has never came back to it. Maybe it wants to come right back to it. But also we have this 886 up here, you know, at 38.7, but that's also, you know, that's anchoring from our hidden bullish divergence point. That's why it's such a valid anchor. Okay, I understand we can anchor from here. Okay, and what would that do? That would place your EK 702 right in the buy zone. It would place your 786 at 37.2, which is still valid. Okay, so there's even a shot in the dark right there. Still remains valid, right? Because, oh no, does it get us? Does it get us? No, we can't have it. All right, see, we can't have it. So already almost, you could even put your stop there if you wanted to be super tight. But now you're worrying about wicks. See, wicks don't necessarily invalidate. Like a little wick like that, and we come right back, and we're just dancing here, and we get because you have so much little negative momentum against this massive amount here, you would still almost argue that you're still structurally valid, right? But I don't think it's going to be that concerning at the end of this, okay? I think that they'll dip down in here, but it'll remain very obviously valid, where we're not going to be as concerned as we think as we might be, right? See how that's concerning, right? But if we're up here, that's very apparent, right? So the apparent one is the one I'm rooting for, of course, but I think we're going to get it. We usually do. It messes with you down to the bitter end, but it usually gives it to you. So we'll see what happens, all right? So what you would be doing, of course, here is you would have a bunch of orders layered, right? And you got to just start layering, you know, however you want here, but basically just like every $100, every $50, it depends how much you want to break your orders up. Every 250, that's getting a little wide because you're in a fairly tight zone here, right? You're not in a very wide zone. So let's zoom in here. All right, so your current zone here is basically you're at 39.6, and we're saying you can go to like 37.7. So you have a 5% window. And even if you tighten that to more of like a buy zone of here, right, that'd even be a 3.5% window. But either way, you're talking about 2,000 here. You're talking about, you know, much less, right? Like, you know, $1,500 windows basically is what this can be layered in. So if you're talking about a $1,500 window, you probably only want to be like every $100. You know what I mean? You can't get too wide because you want to fill, you want to fill these orders, right? So you probably want to have them a lot tighter like that, if that makes sense, okay? So you just leave those orders in there layered, and then hopefully price, just kind of wicks down there, grabs all your orders, fills all your orders, get some kind of double bottom, and then we recover right out of that zone fairly strong, right? We want to see that zone hold up, hold up, and work in our favor, in our direction, all that good stuff. So some kind of, paint some kind of even neckline as it breaks out of here, right? And then maybe we even kind of come down and methodically back test it and then run again, whatever, right? That's basically what you're seeing here is what you'd be seeing right there, right? Another hidden bullish divergence on the reversal side of things, okay? All right, so now let's look at it. So we know our entry area, okay? So your entry is between the two green lines. You see those marked on the side, 37.8, 38.7. Anywhere close to that, you know what to do, okay? Just scale in. Now, if we're looking at from the other side, it's like, okay, well, where are we going, right? If that's our entry, where are we headed? Okay, so we clearly had this obvious top up here, right? Obvious discernible swing high, basically 69K. And then down here, we got this one at, whatever this is, 33, right? So between 69,000 and 33,000, we're going to go ahead and fib this, okay? So we're going to fib this. And we're looking for a couple things here, okay? So the first thing being is, where did we really retrace to, okay? So we had this big drop, right? We had this drop, but then we bounced, right? And where did we bounce to? We bounced to right here, all right? So what is that? That's 0.382, right? The 382, which is the first fib that's, of our fibs here, this is the mild one, right? But it counts as the fib being a valid, these are valid anchor points, is what we're trying to get at. So this is a valid swing high in the middle anchor point. So when we see something like this, we start to look at, okay, what kind of harmonics have a 382 as what we would call the third, the B, right? XABCD, the B anchor point. And for us, we know that a bat is between a 382 and a 0.5, okay? So if we have a bat that's between a 382 and a 0.5, what does a bat have as its D extension? It has an 886. Okay, so let's go ahead and remove this, clean it up for a second, and then plot it, and then we can put the fib back if you want. So what I just said was, we had our swing high up here, okay? So we're going to pivot from there. That's our X anchor point. And now we're going to look for our A. Well, this initial dump, it's irrelevant of how long this was, okay? All that matters is how much of a retrace did we then get back up. And we just marked that, and we said roughly we got a 382. Well, it's actually even better. It's a 423, which is still between the 382 and the 0.5. So that still makes a valid bat anchor point. Okay, so now our anchor point B is now set. So we're now looking for C. So when we retrace on C, we again want to be between the 382 and the 886. So by coming down here, we've already given ourselves a right there. We've already hit the 589, okay? But let's just say we come down here and end up somewhere in this area that we're calling our buy zone, right? So let's just put it down here for now. Let's just hang out right there, okay? Boom. That's our D in the buy zone. I mean our C, and now we go up and we mark our D, XABCD pattern, right? So we're going to go up here, and this would be an 886. So 886 is there. 885, right? 886. So what is that? What is our 886? Oh, that's 65,000, right? Didn't we just say that? Oh, target 65,000. What else is it? If you look back over here to the left, there's a candle on November 15th. There's a square up there at 65.5. So what we just did is we created a different type of zone, but this one is on the target side. And we're just gonna do what we did on the bottom here and place this box. Sorry, I'm doing it very stupid. It just clicked off. There we go. So this would be our target zone, okay? Between 64.8 and 65.5. Out of this position we are entering right now. So chill with the leverage. Be along for the long haul, okay? And also, when you're over leveraged, you can't be along for the long haul because you'll be too stressed about the position. You'll see gains that are going to be massive, and that's going to happen down in this bottom area, and you're going to want to capitalize as you should. And it just doesn't let you play it out the way that we really need to, okay? So just chill on the leverage, hang out, enjoy yourself. This is when you get a comfy position and you sit comfy, okay? This isn't a time to go berserk. Even if, don't let what I'm saying here be like, well, dang, Duck seems pretty confident about this, so maybe I can go a little crazier on the leverage because, man, he gets a lot of these right. I'm going to go with it. Even if I do get it right, that's still a bad approach, okay? Many good wins are better than one crazy one, right? I know it gets euphoric and all that, but just don't do it. No need. That's not what we do here, okay? So look, what we're going to now discuss is something very interesting, okay? So let's zoom in down here, and we're looking from between our points, our swing low A and our swing high B here, okay? From January 24th low to whatever this was, March 28th high, okay? So what's interesting is this, okay? You see right here, this says 638. All right, well, watch it. We haven't even put it in yet, okay? So I can still adjust this, right? So let's say this was right here. 616, close enough, okay? Where does that fall? Okay, that fell right on our top line. Well, wait, what is that? What are you talking about there, Duck? Well, we already have 38.7 marked, okay? And now all of a sudden, when we fib this from these 2 points, that same area became the 618. All right? So where we are right now in this point of retracement from A up to B, we've retraced past the 382, but we've hit the 382, and we're now retracing towards the 618. What is this area? This area is known as the golden retrace. And commonly, once you've passed a fib, okay, see how we have the 50 right here? And that's not even really a fib, but we basically had this huge engulfing candle that just smoked right through it, and now we've been just kind of all over it. It's not really acting as anything, okay? All it acted as is Dow's theory right here. After a run up, commonly retrace 50% away, boom, you did it. Dow's theory strikes again, okay? But aside from that, now that we've lost it as support, right, we're not hanging out up here, right? We're hanging out below it for the most part. So now that we're hanging out below it, it's more likely that we're going to go ahead and touch the next fib, okay? And that'd be the 618. Hence, all of these things aligning, right? Where we have this 618 golden, this is the golden retrace, right? We're in this golden pocket. We're going to hit this 618, and it's going to be the 886 that was already there, right? So we have a lot of what we call just like, I don't know, these things that overlap like this. It's just adding to your part of the story, right? See, here's our 886 we were talking about. See how all these things are falling on that same line? All of that needs to hold, okay? Because of that, this is why I feel strongly about this being fine for an invalidation point. Because if we lose all that, right, we lost all, it should even hold up here, right? It should be here. That's almost where we want to see it, okay? And then a possible deviation down in here, but not really down into this void below, right? More staying in the gray box than anything. Okay? Does that make sense? Yes, confluence. Thank you, thank you, thank you. Much, much confluence. Okay. So now it's like, all right, we have an entry, we have an exit, but this exit, it's like, all right, is that it? Is 65 it again? And it's one of those where that's probably not going to be the case, okay? Let's go to when you run up again, this right here, okay? This right here is the one. This first one is not, okay? This first one is going to be trappish, okay? It's going to be nice for us because we're going to take profit, right? But when you retrace here, okay? This one gives you a second chance for this next pop. And on this next pop, that's the one that I think gives you the real blow off. And that's where we end up at like these insane levels, all right? Like, I mean, look at that, 87 to 91. That kind of stuff is going to get crazy, all right? So, I don't know. It's still way early, right? It's way early. Look where we are. We're way down here, okay? It's very, very early, but ultimately, knowing that this is kind of the like ultimate plan here, it's just interesting that if we can get this to play out, right? If this starts to play out, it just gives you huge points to take full advantage of it, basically, right? So it's like you're buying the range low, you're gonna come up, you're gonna sell the range high. And then you're going to retrace 50% of the way, and you're going to rebuy the double bottom at the range midpoint, and then you're going to go back to the range high, break it, hold above it, and then sell some new range high, right? So I'll clean that up, but like that's what we're looking for here. That's why this bat seems so interesting, right? This bat seems so interesting because if this bat plays out, it's going to give us this. What we're looking at here is basically like it's Wyckoff, right? It's Wyckoff and it's reaccumulation. It's not, this is what it would be if we're going to reaccumulate to go to higher prices, right? It would be a reaccumulation schematic. So that being said, this is exactly how it needs to play out. This is like it creates a creek, and then you have this downsloping trend line that you jump out of it, and that's called like jumping the creek right there, as far as Wyckoff would call it. So this bat, it just makes so much sense, right? It's playing out beautifully on the bottom side, hidden bullish divergence on the bottom side, you're resetting all the oscillators, you're at critical support, you're painting a harmonic. The harmonic makes sense to the Wyckoff. The Wyckoff completes the harmonic because it ends up being a lower high up here. Okay, that's part of the bat characteristic, all right? Can the bat go higher? It can, but that's that like alt bat stuff, and we don't really, that's outside of like the core harmonics, so I don't like the alternate patterns as much, right? And we'll know, this is how we'll know, okay? So price starts running up, all right? Somewhere here we're going to start painting, hidden not hidden, just straight up bullish divergence. It won't even be hidden. It'll be probably very apparent. So, okay. So I know we spent most of the time on Bitcoin here. I'm going to go through quite a few other ones actually right now. But, you know, the majority of everything we go off of here is Bitcoin, because Bitcoin is the macro as far as crypto is concerned. And the macro typically is the deciding factor of things, right? So again, look at this. If say we were down here and we ran up to here, right? You retrace into this golden pocket again, right? Between the 382 and the 618, and you hit that golden pocket, and yeah, good times, good times. So all right, let's move on now. Bitcoin dominance. Okay, this one's been interesting, and it appears that we need to break. Let's see if we're getting anything here. Yeah, I mean, you're starting to break. So that's a good sign for us. Bitcoin getting stronger. Looks like momentum on the daily is starting to continue to build positive here for the most part. So nothing too concerning at the moment. We got, let's see what kind of retrace we got here. You got a 50% retrace, so definitely valid enough. And then if we zoom in, zoom out. Zooming out to the 3-day, which is a little better on this type of a chart. It looks like you actually are as well painting a little bit of hidden bearish divergence. It just really depends where you anchor from. Anchoring from down here, you definitely are. It's more convergence. We'll call it convergence. We'll leave it white. So convergence, convergence, convergence. So let's get back above 4.2, right? Get back above 4.2, and let's make our way back up to this area. That's what we want to see. Okay. That is what we're looking for on dominance. Okay, so we're in the low 40s, and we want this to get towards the high 40s as far as Bitcoin's percentage dominance over the crypto market. Okay, somebody requested this one real quick. So the interesting one on here is USDT.D dominance. I don't usually chart this, but okay, so Bitcoin dominance is about to reverse bullishly, and it appears to me that this is bearish. Now, I don't usually mess with this, especially fundamentally. So would it be a good thing for us to roll over on the USDT.D? Because until you invalidate this, it appears that it's going to roll over to the downside. Okay, so this seems to be an inverse, bruh, of what we got going on the rest of the stuff. Okay, so FYI. All right, here's total. This is one that we like to chart, right? This looks just like kind of what we've been watching here on Bitcoin. All right, so what we want is this break, hook, and go, but we just said we don't think we're going to get it quite yet, okay? So what we're thinking is more like this, right? So we're thinking BAT, right? X, A, B, C, D, somewhere here, okay? So what that would look like is more of kind of like, again, where we're going to sell back off here, right? And then at that point, we said we'd get up here and we'd break, hook, and go. That's what we're referring to in this, with this call out, okay? It's more of this, all right? I don't think your break, hook, and go is going to happen on the bat. I think this is a trap, okay? And you're going to sell back off. it's this one that's the magic one, okay? So let's watch for that. Let's watch for that. So that's what we're thinking on total. And same thing, total's giving us those same vibes where we have the hidden, massive hidden bullish divergence on total. All right. So total looks good for upside, okay? Upside action on total. All right. Russian Ethereum. All right, guys. At this point, you're going to find a pattern, okay? You're going to find a pattern. So daily 12-hour, high time frame here, hidden bullish divergence has been accumulating across the board here. We might have to zoom in here to see if this is. Let's see what we got here. Very close. Very close. And yeah, I mean, geez, you could really almost say that it is, because look, definitely on the MACD, but bears again, pushing price down, massive momentum to the downside here, pushing the relative strength down. They even had the bearish divergence up here at the top where they killed it, right? But now they basically are running out of steam, right? This is very likely going to hold as hidden bullish divergence, okay? Again, look how much room you have. This, which is not the best, but Bitcoin's close to reversing, okay? So you can hold like this and still paint the hidden bullish divergence. You see what I mean? You could dump into this zone another 13% and still have hidden bullish divergence on the daily. But we think it's more likely to reverse when Bitcoin does, which is going to be somewhere much, much higher. ETH is just holding much stronger. Bitcoin retraced further down. Okay, that's why. Okay, so hidden bullish divergence on Bitcoin, hidden bullish divergence on ETH, hidden bullish divergence on total. Like, everything is looking good here for upside. All right. So again, ETH is very likely to follow Bitcoin here and run up to somewhere around the 886. Okay. So that would be around here between 43 and 4,500 on this initial impulse. Okay. So it's going to look something like this. You're going to bounce somewhere where we are. You're going to, maybe stutter here, but eventually you'll end up here. And then you're going to have this sell-off, okay? But then you're going to pop out of it again. And on this next run up, is where you end up at ETH 6K, ETH 6,500, okay? But there will be one more sell-off here, okay? And even likely up here, there'll probably be a little one. But, so that's overall, right? That's the overall game plan. Again, short term, you're looking more for these two numbers here, which would be 43-ish to 45.8. So that's more of your immediate window, and those other targets are more for later, okay? So it's more like this for now. All right? Oops. Whatever, I'll leave it. I was trying to move the yellow ones, or the green ones. All right, so there you go. ETH, hidden bullish divergence, up at some point. So basically buy everything you can between here and here. I know that's a big window, but it's not going to be that big because Bitcoin's already showing signs of recovery that are going to happen in this top side, okay? So if you have orders layered all the way through this, it's highly likely on Ethereum you're going to leave a lot of them behind. That's what I'm trying to say, okay? But anything you buy in this is buy here, sell here. Don't mess that up, okay? It's like, yeah, just the only way you could possibly mess this up is by over leveraging, okay? So you're the only one that could do that to yourself. Don't, no self-inflicting damage, okay? Just get a decent little bag and ride it out. You don't have to have your entire net worth here on 100x leverage, all right? Just fill a position, ride it out. All right, let's move on. ETH to Bitcoin. Yeah, I mean, ETH looks really strong here. That's why your retrace wasn't as bad on ETH as it was on some of the others, for one, all right? So let's say, I mean, we could be conservative here. If we're conservative, we're basically saying that we're approaching this range high again, okay? So here is here's basically kind of what we were looking at on Bitcoin. Not exactly, but where it's like, okay, you test this range high so many times that eventually when you get back to it, right, you're gonna eventually hold above it and you're gonna go to a new range high. And that ends up like it ends up like doing something like this, right? Where you end up at this new high of a range that's almost copies the previous range in size. And then eventually you test these, but whatever. You see what I'm getting at here. So that could put you as high as like 0.1, all right? 0.1. Having 0.1 here also would look like, let's see what else that would look like. If we were to fib all of this, 0.1 is up here, okay? 1618 golden mean ratio. So let's copy this again, paste it up there again. Just pasting the bottom on the top, and there you basically go, right? You see what I'm getting at here? As far as like, oops, as far as that being your zone of area of interest, right? It's like anything up there. So there you have it. Russian Ethereum to BTC should turn in favor of the Russians here. Russian momentum. All right, so boom. All right, move on. Onwards. ETH.D. Let's see what we got here. Let me erase this. All right, let's zoom in. Really, really close. More convergence at this point, okay? But it's not to say that we may push down just slightly overnight. Wait. Yeah, we'd have to push slightly down for this to be hidden bullish. Right now, it's more of convergence, okay? Where the price and the oscillator are going in the same direction, right? Everything's going up here, which makes sense. Up, up, up. So nothing too crazy there. You did start to roll over because you did get some bad news on the backside, but hopefully that's going to have played out by now. Or it's basically it's like in the process of playing out, right? You had this go negative, the negative selling off. That's why I'm saying you might get this to go hidden, right? Let this turn, go hidden, and then come back, right? So yeah, I mean, this could go hidden. How would this go hidden here? It really wouldn't. It really wouldn't. It'd have to be down here. So this will stay convergence. This could go hidden. But either way, I think you're on the same track up here as well. X, A, B, C, and you're going to end up at 886, which is going to have ETH at around 22%. 20%. I mean, is it possible? I guess. I don't see why not. More people, I think, believe in it from a tech standpoint. I could be wrong, maybe not. It has more working product. I don't know. I don't really care about it for that stuff, but I don't see why that couldn't happen. All right. DXY. The DXY. All right. So this one has been like a thorn in our side, right? So we've been, at this point, are now working on a massive bearish bat. Bearish bat is inside of, it's in the deep retrace, okay? What is the deep retrace? If we fib the previous high to low, we are between the 786 and the 886. We've exceeded the 786. We are about to touch the 886 at 101. Anything in this can be a reversal. When Bitcoin reversed in 2017, you did not even get a 786. You almost got that EK702. You reversed like here, okay? That was your reversal, and then you went all the way to 3K. And this was like, I don't know, it was like 17 or 18. It was a lower high than 19, right? So it didn't even give you like the full Gartley full bat. So this could definitely reverse here. Or you get one more little scam pump up, and then, you know, you gap up or something, and then you fill the gap back down, kind of retrace, but then you end up rolling over and you get this like hidden, you get this head and shoulders up in this, you know, rolling over. You have a trend line here and you break it, you know, end up being with like a bearish dragon on the DXY. That's what we want, okay? So we're close. This is close. So look at this point. Between 786, you've already left 786, so you can tighten this up. You're at this point, you're here, okay? So very little upside. Like, you would never, in your right mind, take a long here, you know what I mean? Because, like, look how your upside is and look at your downside, right? It's like you're getting 0.1 on your money. You wrecked, right? Wrecked. So never would anyone take longs here. That means people are starting to fill shorts, right? So that should help cause the momentum to go down. Litecoin on the daily. Again, this is what I said on Ethereum. You're going to start seeing a pattern now, okay? So almost all of these assets on the list, posted in the Discord, and that'll be covered here, are painting this hidden bearish divergence. All right, you see it? And on Litecoin, you're getting it on both. All right, so that's a buy. Your invalidation point is tight, again, because as soon as you, let me paint this better. As soon as you invalidate this hidden bearish divergence, or hidden bullish divergence, by going like this, right, at 94, you invalidate it, right? So we have to stay in this little zone. And look, we're already starting to get a little bit of reaction. So this is a good opportunity to start building your Litecoin long position, okay? And you're going to be targeting this upside area at 200. You're basically buying at 100, selling at 200. That's a almost full double up here, right? So just in spot, you don't need to get crazy here. Stop loss would be somewhere around here. If you wanted to be a little more conservative with it, you can go below the actual low wick. And you're basically painting an inverse head and shoulders here, right? Where we have our left shoulder, got your head, right? And right shoulder. So down slope, excuse me, the neckline could almost be like this, right? And we can get rid of this for now. So there you go. So maybe you know, break out of here and still go sideways a little bit here, whatever. Eventually, you're going to breach that area and you're going to be off to the races, right? Off to 207. So Litecoin, there you go. All right, Maker. Again, I'm going to at this point sound like a broken record. Hidden bullish divergence on Maker. There you go. On both the MACD and the RSI. And look at your RSI, guys. It's starting to turn the other way. You see this? Like, that's perfect. All right, perfect, perfect, perfect. So Maker looking good, long. AVAX, guess what? Hidden bullish divergence on the MACD and hidden bullish divergence on the RSI. Maker, full go for a long. Again, you may get this. Whatever. It's just like this one last little sweep of this. There's your sweep, okay? You can sweep this. You just can't sweep this. Does that make sense? So there you go. Target 121, 134. Stop loss 63. 1 inch. Oof. Good enough though. Hidden bullish divergence. Massive hidden bullish divergence on the MACD. Okay. Again, get back above 190. Targets would be up here into the golden zone and ultimately deep retrace around $6 to $7. You're buying at $1.50. I mean, these things are gonna pump, guys. It appears that we're setting up for a nice pump. AVE, AAVE, hidden bullish divergence on the MACD with convergence on the RSI. Okay. Next, BNB. Guess what? MACD, hidden bullish divergence on the MACD. And it appears to have hidden bullish divergence. And this is why it's called hidden. Because it just hides from you. Boom. Targets, golden retrace, golden pocket, deep retrace. $600. Okay. Stop below the hidden bullish divergence and validation point. 3.34 to 1 on your money. BNB. And you'll probably get even better. Almost 4 to 1 on your money. Okay. Doggy. Dogecoin. Elon's going to make this the official currency of Twitter as he takes over the world. Hidden bullish divergence. Shark. Butterfly. About to play out. Target. Profit. Take profit. 30 cents-ish area. You could even be conservative and go right here. 28. There you go. It knew right where I wanted it. And this invalidation is the low. So this one is textbook. Okay. 4.25 to 1 on your money. Dogcoin. Link. Look at this range. Okay. This is going to go from the bottom of the range back to the top. Okay. You're going to find yourself here. Eventually in the middle. Maybe some of this. But you'll end up on this. And you'll end up here. Okay. Buying at 13. Selling at 50. Okay. Disney. I got you in at 38. Out at 72. Right? Okay. So Link. Guess what? Hidden bullish divergence. Massive amount of hidden bullish divergence. On the MACD. At the bottom of the range. Come on. Send it on this one. Send it on this one. Full send. Full send on the links. The Link Marines. I think if there's any of them left. Most of them probably dead by now. But if there's any of them left. They will have their day in the sun. What is that gain? Yeah, 300. Even to the midpoint, okay? Just be conservative. 140. 140. Okay? Next, FTT. Guess what? Hidden bullish divergence. Boom. On both MACD and RSI, which is even stronger when you get them both. Just so you know, as we've been saying this, okay? And look, you already got this initial impulse on FTT. It's already kind of signaling the way. It's like, hey, you know, the hidden divergence is, I can't wait for you, Bitcoin. I had to give this quick pump, so I have myself room to kind of retrace while you're finishing your retrace, and then we can run, you know, in harmony together. So eventually you want to see this, and you'll end up there, okay? Target 64 and 82, okay? There you go, 64 and 82. All right. Next, ICP. Same thing. Look at this, guys. Hidden bullish divergence on the MACD, and on the RSI. Can you see it now? The more we do, is it easier for you to see before I plot? I can zoom in on this one. Okay, you take the previous swing low that lines up with the previous negative momentum island, and you anchor it to the higher low with much lower levels of negative momentum and lower levels of relative strength. And now on the other side, your relative strength is starting to strengthen, okay? As is your negative momentum on the MACD is starting to build positive, right? Okay. So here again, we have this previously already identified somewhat neckline here. We just need to get back above this and find our way ups into this golden zone, right? Okay. That is ICP. Sol, another one. Massive amount of hidden bullish divergence. Boom. You're buying at 100. You're going to sell at much higher prices. Dang it. There you go. Okay. So Sol, hidden bullish divergence, targeting top of the zone again, right? I mean, you can fib this from conservative high to low. Your initial area of interest would be this golden pocket between the 382 and the 618. And then you, of course, have your 786 to 886 deep retrace. But if you can hold throughout everything, okay, you're probably going to get up. What's going to happen to you is this. Okay, so if you can weather this storm, you're going to end up in here. Maybe you test the bottom of it. You're going to end up here. Okay, you're going to retrace, paint hidden bullish divergence here. But then you're going to end up here. So can you hold? Do you have the hands to hold from here and to sell here and on? Do you? I'm asking you. Do you? All right, looks like we have a request for comp. Here's comp. Harmonic, hidden bullish divergence, of course. Not as clear, but still definitely there. The better ones are the ones where you had it on both, okay? If you guys are wondering which ones to pick, or just grab a little bag of each, right? Grab a little bag of each. But the ones that had it on both are probably going to play out a little stronger. So this has got this like down sloping trend line here that you're going to need to breach. All right, so as we're working on this breakout, look for this. Maybe you have one more little retracement, but eventually you're going to get a break here, okay? I mean, you can get it right now. You don't have to wait. But this is obviously your initial little bit of resistance there. And then you have this as well, okay? So maybe you end up going into this sideways here. Something like that. Whatever. Again, you could break it right away too. It doesn't you're there. It's time, okay? On all of these. It's time. Ethereum Classic. This one had a nice initial run earlier. You had a 100% gain previously, All right. And now you've obviously, you've sold off, right? Some of the way. And what did you do when you sold off? You painted hidden bullish divergence. Imagine that. Massive amount. Not quite on the RSI, but whatever. This is going to turn. Again, this could still come as low as here and still be hidden bullish divergence. So be careful. I mean, you still have a buy zone, but you can feel comfortable already layering, right? You just don't just ape into any of these. You would layer on all of these. No matter which one we covered here, you would be layering, okay? Again, what does that mean? That means you put your buy orders in the buy zone, okay? And you distribute. You first decide how much you're going to allocate towards each position, the majority being in Bitcoin and Ethereum. Then you allocate how much you're going to allocate to alts, and then you say, okay, I'm going to allocate, say, 20% to alts. Okay, and then I'm going to buy 20 alts. That means 1% goes into each alt. So if that was 20 grand you were allocating to alts, and you're 1% in each, that means each alt gets 1,000. You take said 1,000 and you break it up into 10 $100 buys. Now break that down however you want. Add a zero, take a zero away. It's the same difference, okay? So there you go. Allow the scam wick to come be your friend, not your enemy. Buy these up. It's more fun. Play a game. See how many you can fill. Okay. YFI. This one, again, everyone's scared of it. The dev abandoned ship or something. But the Dogecoin dev abandoned ship for like 5 years. And then Elon Musk took it over and he's like, I'll be the dev. So it's irrelevant of the fundamentals. Project is going to pump. You have hidden bullish divergence, both RSI and the MACD. Quick invalidation because you can have a stop right there. Okay. Target, initial target, at least right here. Does that coincide with anything? Possibly. Just right in the golden zone, right? Just right inside the golden zone. Deep retrace, 786886. There you go. Okay. By here, stop out, invalidate, reassess here, take some in the golden zone, take some in the deep retrace, right? Others will, you might as well too. All right, FTT, this has not changed. Stop can maybe now come up. That's about all that's changed, okay? Hidden bullish divergence on the MACD and the RSI. Inside of a harmonic, waiting to play out, that's testing an area that has no supply left. Dwindling supply. Boom, break, hook, go. CS 74 to 85. Frame it. I don't care what you do. There you go. Dot, same thing. Very clear, very clear. Hidden bullish divergence. Oops. On both MACD and RSI. Looks great for a long, golden zone, deep retrace, top of the zone, top of the range. Anything you get inside here, or up here is all gravy. Okay. What would that look like at this point? It would look something like this. Stop would be here at 1382, and you could have an initial target inside the golden zone giving you 5 to 1, and then you could have a secondary target hitting the deep retrace. Okay, Something like that. Dot. All right, NEM, old coin, same story. Hidden bullish divergence, RSI, MACD, upside incoming. Okay. NEM. Ocean, same thing. That's why I said, guys, I'm only going to cover X amount of them because at this point, if yours doesn't look like one of these and you're trying to still get into it, like, what are you doing, right? Look at how obvious these setups are, how quick this invalidation point is, how massive your upside target is, right? Like, you're buying the bottom of the range, midpoint, sell high. Okay, buy low, sell high. This is the meaning of that. All you gotta do is execute it. Okay, you've been given the map. Okay, just follow the map. Don't detour from the plan. There you go. Targets: golden zone, deep retrace. Buying at a nickel, selling at 16 cents. 3-1 on your money. AXS. Look how tight this invalidation point is. Extremely low. The stop remains. The stop hasn't changed, nor has the stop been hit. Hidden bullish divergence is painted as hidden can be. Target golden zone, deep retrace. Perfect textbook dragon, AXS, with dual hidden bullish divergence. Buy it. Rune. Hidden bullish divergence. Imagine that. I'm sorry, guys. I'm not trying to be a dick. But at this point, there's nothing further that can be said. You just need to scale into any one of these various positions covered. Massive downsloping trend line. Look at that. It's almost like if this was range low, right, which it is, range high, you're gonna break out like at the midpoint and then go to the range high, right? You could have bought range low previously, but now you're just buying the next best entry, which is the hidden bullish divergence off of the first retrace. Your next best entry would be here on the back test, or you could call it here of the range midpoint, either way. Both of which would target top of the range. Boom, boom. Okay. All right, guys. Back to Bitcoin here. Nothing's really changed. I'll zoom into the 4-hour for you here. Looks like all we're doing, we have this hidden bullish divergence. Again, this could drop, right? It could drop, remain hidden bullish divergence right there. No problem would happen at all, okay? All that would happen is this would now be here, and it's still the exact same pattern. This is why we do not care about duration, because in this situation, I just altered duration, and duration remained, as always is, irrelevant. Let's put this, so 37.7, 38.7, okay. There you are. There you go. Anything in this zone, guys, you're just, right now you should be layered, okay? Your charts should look like this. You decided how much you're going to put into Bitcoin. It's okay to have a few outside the zone. You front run, right? You make sure your bids get filled. Some will, some won't, but you at least make sure you get a position out of it. That's what I'm trying to say. You could, layer them even thicker in here. Like so, right? You get it? You get it? Okay. All right, well, I think that's pretty much going to cover it for the night. We covered like 25 assets. Again, that list is in the Discord if you guys want to go back through them. But yeah, pretty much anything you saw on the stream tonight, it pretty much mimics everything else along, you know, they're all going to follow Bitcoin, guys. And Bitcoin's paying the hidden bullish divergence. So is everything else. Let me go back to the daily. There you go. Hidden bullish divergence daily. Even if you go to the 12-hour, it's still there. Hidden bullish divergence, and it's starting to like play out. So like this is hidden bullish divergence on the 12-hour starting to play out. That means your daily isn't going to be able to continue to go down much further because the 12-hour is going to push it up. It's starting to play out. Okay, so get your positions. This is probably, tonight is probably the bottom, guys. You have a new week opening next week. The dollar's about to roll over. 3-day holiday. Traders are eager to get back to the trading desks. You know, money's going to be flying. Algos are going to be identifying hidden bullish divergence, especially if we dump a little bit more through the night and we hit this 886, we hit this 618, we hit the you know, an anchor point on a harmonic, we hit the D on the bat on the 4-hour. Like all kinds of stuff's going to be happening. And full moon, so the witch is out in full, right? So all right, I think that's it, guys. I'm winded. Hour 25 minutes. Strong stream. Happy Easter. Duck out. Peace.
Future.